The market is absolutely tanking today. We have everything down across the board. You have S&P 500 lower, NASDAQ lower, gold is holding up, but Bitcoin getting killed here down to 82,500. You've got the dollar index even kind of falling apart, but trying to bounce. But the big losers today, the Russell index is down another 2.6%, and even the Dow Jones is getting slammed as we go into today's tape. And we can't leave off oil, which is also down a bunch. So you might be wondering, what the heck is going on in this market? At the time of recording this, we've got minus 1.8% on the S&P 500, minus 1.65, minus 1.6, and 2.4 for the Russell. Now, of course, this is a violent move lower, but what is causing the major sell-off? In this video, I'm going to do two main things. Number one, I'm going to explain what the heck is going on to make the markets move like this. And number two, I'm going to talk about trading setups that I personally like in this market if you stick around. Let's get started. So please note, by the time you see this video, prices are likely to have moved a lot. They could have bounced by now, they could be tanking lower, but I'm going to give you a little bit of a synopsis of key levels on the daily chart that you can take with you in your analysis. So check this out. First of all, S&P 500 at the time of recording this getting absolutely slammed. And the reason I say this is getting absolutely slammed, 1.9%, yeah, that's a down day, but it's down after having already been down for several days before this. We see follow through for the first time in quite some time for the bears. And what I want to point out here is, if you're watching from a technical perspective, sure, we might get a bounce, but the bigger question would be if we're going to repeat the type of bounce that we saw previously just a few days ago. The S&P 500 bounced on Friday, but was met with immense selling pressure that followed through on Monday, and now we get the Black Tuesday kind of feel. I know my thumbnails are a little bit exciting here recently, but the bigger question is there some opportunity in this sell-off? And I'm going to share more of my thoughts on that in just a moment. For traders watching the S&P 500 and the NASDAQ, this level of support breaking is a true problem for technical traders. I mean, if you see here, we have key support that many traders were looking for a bounce off of, and now we see price down underneath 5,800, and really I don't see key support until you get down a little bit further down to this level of support just around 5,700. So we may well see this price continue to push lower, but I want to tell you before you say, Nick, you're some monster doomsday perma bear, I want to tell you what I'm actually doing in this market. Well, first of all, I am long gold. This is a position that was shown to me on the Edgefinder's top setup score. We got a very bullish reading for gold. We had a pullback into a key level of support, and I'm long with a stop loss below structure here. After getting the sharp bounce, we've seen some good follow through, and I'm looking for a resumption back to these highs and perhaps even a breakout beyond those, at which case I'll be looking to trail a stop further on this position. Specifically, if we get a break through the highs on gold, what I'd be looking to do upon a closure above this previous all-time high would be to take my existing stop loss and move it just below that market structure of newly found support. I'm getting ahead of myself though, because this chart could still roll over, at which case I would actually trail, or I would take a loss in this position, but would be happy to pick up a slightly larger position around 2780. This first attempt for me is a bit of a small-sized long position on gold with intent to actually take a bigger position should we get a larger correction in the price of gold. And here's a bit of an updated P&L look on my gold position. I have 2,000 shares of GLD, which is a gold ETF, with a stop loss below that same structure point. I'm also long TLT and have been for several days, actually several weeks, and continue to hold on to this position as I am, as you can probably tell, pretty risk off on this market, which has been so far this year one of my better calls. I got out of my Bitcoin long positions. I've been out of my stock positions for some time. I'm long TLT, I'm long gold, and I'm long yen. You can't really get much more risk off than that. But what about stocks? Is the stock market just headed to zero? I mean, is this really going to be the end of all days? And what is really behind this major stock market sell-off? Well, here it is. Let's break it down. Tariffs on Mexico and Canada are going forward. Many people were hopeful that a resolution between Trump and the leaders of these two countries would come to some resolution sooner, but unfortunately for kind of the market's sake, these things are going forward, and there is likely to be some severe consequences on both sides for the tariffs that are imposed. Now, again, people get all sorts of political about everything, but simply knowing that there is uncertainty around the potential ramifications of tariffs on both sides sides, the Canadian economy, the Mexican economy, the US economy, inflation, all of that uncertainty. Leave your politics at the door for a second and just understand that not knowing what that could do to the economy makes the market super scared. And that is why it's selling off. Now, you might look at this in 6 months, 12 months and say, hey, the tariffs weren't really that bad and the market may rally. Or there is some lasting damage here that causes stocks to continue to sell off. I'm going to go ahead and say, for the record, I am part of the former squad. Although tariffs are catching headlines and causing market sell-offs right now, I think in the bigger picture that this is an actual buying opportunity for many key names. The other side of it is the Chinese tariffs that the Trump administration has imposed, up to 20% tariffs on Chinese goods. We do see Chinese stocks seeing a little bit of selling pressure, but my goodness, it pales in comparison to this sell-off in the S&P. So what am I actually doing on the stock market side of things? Well, I'll tell you, I am buying shares at constructive levels. I already own a position in Tesla and Nvidia. I am looking to add shares if we continue to see a sell-off, especially down around this 260. I may look to pick up more shares of these companies for the long term. I'm also long Uber and willing to add shares here. I'm also looking to buy Nvidia down around $100 per share. So if we continue to see sell-offs, this in my view is a great opportunity long term to pick up some shares of companies that I really like. So no, I am not a perma bear. I am actually excited about this opportunity to finally get some dips in stocks that I've been watching for a long time, and patience here is really paying off for me personally. The other thing on the trading perspective that is paying off is staying systematic. I mentioned there is no other charts here for me right now than taking a look at gold, looking at yen crosses. I mean, I've stayed systematic all year and it's paying dividends right now because I'm long the things that are working, short the things that are working, and I'm staying out of the way of stocks right now. So in a weird way, I've outperformed so far this year through lower beta stuff. What I mean by that is instead of buying tech stocks and buying high risk, high reward companies, I have been completely out of the way of the stock market sell-off and Bitcoin and crypto sell-off, and instead staying with what is working and with what fundamentally makes sense to me according to the Top Setups algorithm. If you don't have a copy of the Edge Finder, this week it is currently 30% off for subscribers of my channel. If you'd like some information about getting access to the same tools that I use to find the trades that I take, all the information can be found in the description down below this video, or head over to a1trading.com/edgefinder to find out more about the tool. And if you made it this far in my promotional advertisement, for our subscribers here, we're doing 35% off, an extra 5% discount if you send us a direct message on our website and chat with someone on our support team about the tool. All you have to do that, click the first link in the description down below. And stocks continue to sell off as I record this video. I mean, now we're down over 2% for S&P 500, things getting absolutely waxed. Gold holding up there, but I would not be surprised, to be completely honest, if you do get a little bit of rollover in gold alongside this sell-off, simply as people look to rush to cash to protect their, well, a lot of times people who are rapidly selling off assets across the board, gold gets thrown into the mix simply to raise capital, to reduce margin, etc. And TLT is now actually confidently in the green on the day, looking great. The dollar index largely unmoved here today, and that again plays a little bit into gold. Look at silver, actually went red here. So gold outperforming here pretty much everything else. Russell down almost 3%, my goodness. And we've got the VIX exploding up to 26. This is a crazy move for the VIX and shows volatility is not going anywhere this year. You kind of knew it was coming when we had Trump take the office, whether you like him or you dislike him. He's got his strong opinions and his strong agenda, and it's going to butt heads with someone somewhere. And that has created a lot of volatility here in this market, which personally, as I mentioned earlier, is an opportunity to take advantage of some discounts. I have been looking to sell puts and sell covered calls on so many different things. I think this is a great year. I talked about this yesterday with Chris Pulver, who is also an options trader. There's so many opportunities here to sell premium in this market, in my personal opinion, this year. Bitcoin down 5% on the day, cannot get out of its own way. We actually came back, retested that key area of resistance around 94,000 or so, and you can see we completely liquidated back down. I mean, if you were somebody who was buying the hype news on Sunday, I would just encourage you to really be careful with markets, because buying some kind of news event like that can be really risky. And we saw exactly what kind of can happen in that market environment where you get everybody hyped up all at once, and a lot of times it's a big pull the rug out from underneath everyone. I do like Bitcoin from a longer term perspective at somewhere around 70,000. I think I might start buying a little bit. But even then, I'd still be cautious because as a risk asset, this thing is getting tanked alongside everything else. For people who are hoping for Bitcoin to be some sort of safe haven away from traditional risk assets like stocks, it's not happening right now. Bitcoin, Ethereum, all of the crypto names are not, they're highly correlated to risk assets. So thinking that you're in some way uncorrelated or hedged or diversified by owning Bitcoin is a complete and utter fallacy, in my opinion. Do not think that crypto moves independently from stocks. They move absolutely together. Maybe that'll change in the future, but for now, don't think you're smarter than everyone saying, yeah, crypto's the best thing since sliced bread. When the stock market tanks, everyone's going to buy Bitcoin. It's not happening right now. Ethereum also getting even crashed harder here recently, down 5% today, and just cannot catch a break for this one. Today's video is sponsored by DNA Funded. If you're looking to get funded this year, check them out. There's a link and promo code in the description down below. You can actually use code A1T20 for an extra discount for a limited period of time. That is something that they are offering. They offer up to 90% profit splits, and they offer unlimited trading days on both their 1 and 2 phase challenges. You can trade pretty much anything on DNA Funded. If that sounds like something you're interested in, do your due diligence using the link in the description down below and use that promo code for a discount. You have to look at the 3 prongs, if you will, that we always talk about on this channel. This is why I took this trade. If you want to know why I took this trade, right? It's the 3 parts. The technicals are the simplest part of the whole trading strategy. We have an uptrend, that's pretty clear. Pulling back into a support level, that's pretty obvious. That's all the technicals. That's it. So, if it breaks those lows, stop out. That's all we do for the technicals. No more complicated than that. I know exactly how you feel if you're new to trading and you're like, no, but I want to know your secret. What's the real reason you took that trade? That is the real, there's nothing proprietary or secret or magical about my technical entry strategy. Key level support in an uptrend. Maybe it works, maybe it doesn't, right? That's all. Okay. So I'm being so, I'm emphasizing this so heavily because this is a common mistake for new traders, is they say, no, but really tell me why. How did you know that was going to hold? I didn't, right? I'm telling you, I don't know what the market's going to do perfectly. Nobody does. I made an educated guess based on the technicals, but if you only hear the technical part, you miss the rest of the whole reason the trade was taken. Technicals is one part. What about sentiment? Well, actually, we saw as this market sold off, people started to get very bearish on gold again. And so we had a nice crowd reversal signal, contrarian bullish reading. That was part of the Edge Finder's score on gold. So that was another reason, right? So we saw the crowd got bearish. We also know institutional money is bullish. What is SA? Sentiment analysis. What is TA? Technical analysis. What is FA? Fundamental analysis. These are the 3 pillars to why I take trades. Okay. So technicals, key support, and an uptrend. That's it. Don't make it any more complicated than that. You don't need to name things fancy. You don't need to spend all day long filling out notebooks full of stuff about technical analysis. It's a waste of time, in my opinion. Look, my trading edge doesn't come because I can spot a support level. Anybody can do that, right? To have an edge in something, you can't try and find an edge in doing what everybody else is doing exactly the same way. Many traders don't know this, but a lot of trading profitability is dependent on you using the correct brokerage when you're trading. Remember that your trading costs are an input to your trading results. So what I mean by that is trading costs such as commissions and spreads and swaps and overnight holding things. All of that plays into your final results as a trader. And another huge thing that I cannot emphasize enough is you making a deposit into a brokerage account can earn you some significant trading perks if you use the right offer links. In the description down below, we have put together a collection of some of our partnered brokers that offer welcome bonuses when you make a deposit, free stock shares when you sign up, and access to some of our products for free. On our website, a1trading.com/brokers, that's a1trading.com/brokers, you'll see a list of free offers that you as a client to these brokers can get upon sign up and deposit. Do not make the rookie mistake of just signing up for any brokerage and not using a specific offer link. If you use our referral links, you'll get something out of it, and you'll also be supporting our work here on this YouTube channel. Thank you for watching. We'll see you next time.